Hey everybody, what's up? Today we will be doing another stock analysis, and the company for today is PayPal. Now, if you've been following the channel for a bit, you know I love PayPal. As a company, I'm invested in the stock myself. Probably a disclaimer for you, but outstanding financials of the company, a ton of growth that we've been seeing recently. And we're going to get into their financials, go through their recent earnings, take a look at their chart, and I'll also give a valuation on the company for myself as well as for you. And so, yeah, if you're interested, make sure to subscribe. Also, comment below any companies you want me to review. I do these every single day of the week. So let's get into PayPal. So, getting into PayPal, they do digital payments, commerce, a lot of different things like that. They have Venmo, which is fairly popular, especially in the US. And other than that, just a lot of different financial, personal finance things. So, looking into the company, 89, just about 89 billion market cap. We have a target price of 96 currently, long-term growth rate at 11%. And right now we are at just under 90. I do have my own valuation of this company, which I will get into a little bit later. It is fairly surprising, speaking for myself. But anyway, getting into the growth summary here, we can see across the board very positive, other than free cash flow, which isn't expected to perform too well in the short term, which isn't great, but the other numbers here all look so good that I think that mostly cancels itself out. But anyway, looks pretty solid here. So moving into their financials, let's start going through some stuff. So I am going to go to the years here. I don't believe their fiscal year 2024 is complete yet, which it is not, but they are expecting to see enormous sales growth over the past year, which is fantastic. Same thing with their operating income and I believe net income as well, which we can see is way higher than it has ever been. And this is also an incomplete fiscal year report. This is an estimate. So a lot higher than it has been in the past, which is fantastic. Other than that, total shares look like they are decreasing actually very quickly. They basically went down over 10% over the past 3 years, which is fantastic. That definitely builds a lot of value within the company. And one thing that I will say on that is that this is a perfect time for the company to be investing in itself because, in my opinion, this stock price should be much higher, which is why I bought it originally. It should be much higher than it is now just based on what they've been doing. So I'm expecting this to have a pretty good next couple of years. But over the past 2, 3 years now, the company has been repurchasing a ton of stock, and that is definitely going to be very rewarding for them as well as other investors in the future. Now looking into the balance sheet, let's see how we're doing here. So I will be going into the quarters here because they don't have any 2024 data just yet. But overall, assets are just about where they have been for the past 2 to 3 quarters. Obviously, we are seeing an all-time high currently in assets. They have 12 billion in cash, a decent amount of debt though, but isn't too concerning considering they do have basically enough cash right now to cover almost all of it. So that is perfectly fine there. Um, and honestly, with a company like this that is really focused on growth and improvement, especially considering how far their stock price has fallen in the past couple of years, I think it is good that they have this much cash and they're utilizing their debt a lot, which definitely will help them kind of propel themselves into the next couple of years. But overall, everything here looks very healthy. Debt situation is fine. Assets are mostly growing year by year. There was a slight decrease over the past quarter, but that's really nothing major. So now let's head into the cash flows. Should be very positive, and we can see operating cash flow is looking fairly solid. We saw a high December 2023 overall, though, looks pretty much consistent with how the last 2 years have been for the past quarter. Seeing some mostly selling of investments actually over the past few quarters. 2 quarters ago, we did see 4 billion in investments purchased, which is good. But overall, they have been selling off some things, which again hasn't really affected them because their sales are up a ton. So overall, no big deal there. Other than that, we could see the humongous amount of stock repurchasing that they have been doing, which is awesome. it is a perfect time to be doing so, and I'm sure they're going to ramp this up even further. You could see their biggest repurchase in the past 2 years has been in the past quarter. So would not surprise me to see that increase even further in the next few quarters. And other than that, everything else looks good. Free cash flow is consistently positive for the past 5 quarters. And even before that, they did have a slight negative, but other than that one outlier, they look very, very consistent. Next up, let's check out their ratios, which should all be fairly solid based on what I was seeing. So their gross margin is a bit on the lower. Oh, that's 2023. Let's go to the quarters. So right now they're at 45.66, which we could see if you go back over the past few years, that is actually an increase from 2022. And on average, just about in line with 2023, maybe a little bit lower. Net margin looks pretty solid at 14. You could see back in 2022 and 23, it was below 10. So being where it is now, that's a pretty significant improvement. Same thing with their returns on assets and equity. We could see there's been a fairly considerable improvement. And actually, return on equity is at the highest it has been in the past 2 years altogether. So looks really good there. One other thing is their debt to equity, which we did see they had a decent amount of debt earlier. They are at just under 53% right now, which is one of the higher numbers we've seen recently in some of the reports that I've been doing. But overall, that is no big deal. Anything under 80% is fairly healthy, actually very healthy. Anything above that is kind of getting into a bit of a more concerned range, but as long as it's below 100 even, this is perfectly fine. Very manageable amount of debt. So now let's see if we could see anything recent with their earnings. I believe the last time I reviewed this company was probably in October or probably October. So there should be some new stuff here. First off, let's start with the metrics recap. And looking in here, there's a couple of things to go through. So transaction revenue missed slightly on estimates. Other revenue beat. Overall, it looks like they mostly canceled out, though. Operating margin came in above estimates. TPV, which I don't know what it means, but it did increase, and it's probably something value. So I'm going to assume that's positive. Venmo had a 7.7 increase year over year, which is awesome. Transactions also 5.7% increase year over year. Active accounts were at 432 million, which surpassed estimates, which is awesome. And also quarter over quarter, they saw a 3 million active account increase. Take rate, I don't know what this means, but it did beat estimates. So we're going to assume that is good. Transaction margin is at 46%, which also beat estimates and beat quarter over quarter as well. Other than that, I don't know too much about the rest of these margins here, but if you do, feel free to let me know in the comments because I don't know what take rate, expense rate, and transaction and loan loss rate means. But overall, it looks fairly solid. Their free cash flow also beat estimates fairly significantly too by about 100 million. So that is really, really solid there. One other thing to take a look at is their street takeaways here. And right now we are looking at a couple of different things. So target price at 94 maintains a buy, targets 89. So a $5 raise here and then maintains a market performance there. So overall, let's see what they're looking at. So 6% year over year growth in margin dollars versus 5% in quarter two. Upbeat on durability of branded volume trends, which is solid. Highlights outlook for 4% core transaction dollar growth at a minimum, probable upside as well. So overall, it looks like very positive. The shares were trading down on this, which is kind of surprising, but overall, everything looks fairly positive. Analyst reaction to the results was mixed. However, just based on everything I'm seeing, I'd say it's more on the positive side. And other than that, everything looks fairly solid. So we're seeing the stock price recently have a fairly large rebound. They had a low of right around $50. I believe I bought the stock somewhere around 80. I bought it this October, so I bought right around 80. Possibly in this little dip here as well, but overall, stock has been in a very strong uptrend. We just saw it go over 90 for the first time in a while recently. I think we will continue seeing the uptrend, but For my own valuation, let's head back into FactSet and I'll show you what I've been looking at. So, a decent way to value companies is to take all of their competitors in their sector. So, for example, PayPal would be payments networks. We can also do named competitors as well, but for now, we're going to do this one. And what you can do is do their price to earnings ratio, take what it is, and basically compare that to PayPal's. So you can see the average for this sector is 38.42. The median is 34. So what I do is I average those together, and then you can multiply that by PayPal's EPS. So, or not their, yeah, their EPS, not the PE ratio. So PayPal's EPS currently is 4.19. Based on these PE ratios in their sector, their valuation is right around $142 currently. So in my opinion, that kind of holds up fairly well, I think. So there is a lot of upside just based on their sector, which also in their sector, they are a powerhouse. They have a ton of the market share, and I think they're probably the most dominant company. So the fact that they are this overvalued compared to less dominant companies, or undervalued. The fact that they're this undervalued compared to those companies is honestly surprising. So I think there is a ton of upside here or further upside to this. So we'll just have to see what happens in the future. But overall, we can also look into their named competitors. I don't think it'll change up too much, but we'll see once this loads in here if there is too much of a change with the valuation. I would love to see it if it can work for me. But overall, I think what we're going to expect. Okay, so there are different companies here. So let's see. So now it is 25.73 and 21.21. So let's put those numbers in. 25.73 and 23.21. And do that. And basically what we're going to see is the change here. So now it's putting the valuation, let's just make sure I got that right. 21.21. Okay. 21.2. So now it's putting the valuation at 98. That is based on named competitors. However, again, one thing to note is that some of these named competitors are fairly different. Like, for example, Alibaba is being included here. I think American Express is a solid one to add, but like companies like GoDaddy, maybe even like Double Verify, they're not exactly in the same sector, at least in my opinion, as PayPal. So I more so like to do their sector based instead of just named competitors. But overall, I think it still holds up fairly well. So valuation at $98 compared to 80, just about $90 currently. That is still fairly undervalued. So either way, looking at both sides of this, it is a fairly undervalued company. And even just looking at their stock chart, I think in the past 3 years, when they were at their all-time high in 2021, they have added so much value since then that it wouldn't really shock me to see us return to that $140 range that I was talking about in my first valuation. You could see there is a very large gap here on the stock price. So seeing that come back fairly soon would not be surprising. Possibly within a year, not really sure, just based on how their next few earnings reports go. But that is my valuation. That's my analysis of this. So if you enjoyed, make sure to subscribe. I make these videos basically every day. So that's all I got for PayPal. Thanks for watching.